Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
One of the biggest stories today is the IPO of Aramco. Aramco, the crown jewel of Saudi Arabia, the largest oil producing company, and the largest and the most profitable company in the world, will go public, and it will list its shares on Tadawul, Saudi Arabia Stock Exchange. The company is valued at $1.5 trillion, and the IPO is expected to raise between $20 to $40 billion. Any value or any deal of more than $25 billion is going to be to surpass and exceed the IPO of Alibaba back in 2014. The prospectus published by the company back on November 9th has left many questions unanswered. We don't know, anything about the size of the deal. We don't know much about the scope of the deal or the price ranges. All we know is the price of the share will be published on December 5th, one day after the subscriptions close. Critics of this deal, especially foreign investors, are very cautious about jumping in and investing in Aramco for a number of reasons. First, it is the geopolitical risks, especially after the September attacks on Aramco's production facilities. Second, Saudi Arabia is running out of money. Their sovereign wealth fund has dipped below $500 billion. And third, the Saudi economy has been running a deficit between $40 to $60 billion a year, depending on the price of oil. Most of the money, experts believe, will come from Saudi families who are being pressured to invest in this IPO. China, though, is a country that falls in its own category. China is going to commit $10 billion from its sovereign wealth funds and state-run enterprises. Because of many reasons, it will hedge against increased oil prices for China. Not to underestimate worries about the prices, worries about size, geopolitical risks, and overproduction, there are a number of takeaways from the IPOs. First, this is a business deal that will test with deep political implications. It will test the legitimacy of Mohammed bin Salman's leadership in the kingdom and in the Arab world. Second, China will emerge as the number one foreign investor, and it will strengthen its position in the Gulf Cooperation Council. Third, most of the money will come from wealthy Saudi families. Fourth, if successful, this IPO is going to pave the way to a wave of privatization, both in Saudi Arabia and in other Gulf countries, such as the UAE and Kuwait. And last but not least, this will test also the strength of Tadawul, the stock exchange, and its ability to handle this blockbuster deal.